You are listening to What the Flood, brought to you by Aon Edge, flood insurance that works for you.
Okay,
Hi, everybody.
I'll start.
Welcome
Go
to
ahead.
another episode of What the Flood podcast. I have two wonderful folks from our customer service team here with me today, and we're going to talk a little bit about some questions they get asked all the time and go into a little bit more detail about some things you might be wondering. So we have Dan Traeger and Jessica Washburn here today. Hi, everybody.
Hello.
Hi.
All right, I think we're going to start with Jessica. Jessica, can you just give us a little bit of history with Edge? How long have you been with Edge, and what did you do prior to coming to this wonderful company?
Well, before I came to Aon, I had about 10 years in with CenturyLink Telecom. So overall, it was almost 20 years total in telecom. So anywhere from customer service all the way up through managing multiple locations in retail, which is kind of odd. But after getting laid off, because they had eliminated a bunch of positions, I was referred to National Flood Services through a friend of mine, where I applied for a position there as a supervisor, and there were several different supervisors positions available, and I ended up working as just a regular customer service manager, and moved throughout there, learning different parts of the National Flood Insurance Program, and working in quoting, working in cancellations, until I was able to apply for a company that was growing. Coming from one that was constantly shrinking, it was fantastic to see the growth that Edge was doing, which was totally seductive to me, and I had to be part of it. So I reached out and was able to get the position here. And so it's been about 3 years since I joined Edge, and about 5 years with insurance in general. Before this, no insurance at all. So
So do you like telecom business or insurance better?
well, it's a totally different animal. And I mean, there's definitely rules and regulations on both sides that you have to abide by. However, I feel like working in this industry, it's definitely more of a growth type industry, whereas the telecom is definitely changing. It's going in a completely different direction than it used to be. So I prefer the insurance. It seems more steady and secure in terms of employment. And it's just something new. So I'm always learning something.
Great. And Dan, let's hear a little bit about your history.
So, okay. Geez.
How much time do we have, right?
Yeah, I kind of have your classic writer's background for jobs. A little of this, a little of that.
Mm-hmm.
The longest stretches that I've done in jobs, though, are obviously 6 years in the Air Force, uh, working for the Stealth Fighter project. Coming out of the Air Force, I went right to work for probably aluminum, Anaconda Aluminum, doing aluminum foundry work. But my customer service experience really started with Borders Books. I did about 2 years at Borders, where I was operations front end manager because they didn't really have anyone else who could count, I guess. And from there, when Borders closed its doors permanently, I went to Walmart and I stayed there for about 6 years total, through different Walmart stores. But I started out as a maintenance guy, helping break down our old Walmart store that's slowly sinking into the swamp,
Wow.
and moving furniture and equipment over to the new store, which is no longer a new store. This is many moons ago. Um, but by the time I was done with Walmart, I was an assistant manager on the front end in Austin, Texas. And then we had a family tragedy, so we quit that job and moved back up here. And there's a stint with Apple, being kind of Siri for their website for a little while down in Austin. And then kind of basically just kind of fell into insurance sideways. At the time, the NFIP, FEMA was doing mop up for, I think, Hurricane Harvey, the one that hit Texas really bad.
In 17?
And yeah, in 2017.
Mm-hmm.
And I came on initially as a claims person for filing claims, and that lasted until I hit the sales floor and talked on my first call, and they monitored my first call and said, nope, we're taking you to customer service. So I stayed in customer service for a while. It's been about a year and a half with NFIP, and then shortly after Jessica moved from I think you were in tier 4, right?
Tier 3.
Tier 3, yeah. Shortly after that, they were looking for another person, and I just kind of coasted in behind her. So we've been with Aon Edge in private flood for roughly the same amount of time. I think she's got me by about a month or so.
And not
Ish.
that I'm trying to compete with the NFIP, but which side of the house did you like better, NFIP or private?
Oh, private by far. Like way better.
I feel like that's
There's so much more
a
flexibility
no-brainer.
with it. Yeah. The NFIP is very rule structured, and they're inflexible with everything. They don't take into account that things happen.
Yeah, right,
uh, and
exactly.
they can't really respond to things happen. Um, Unlike FEMA, which is the
Right.
things happen arm of the government. So
Hmm.
it's kind of their own odd animal. But
Yeah, they have a
yeah,
lot of
no, private
systemic
flood all the
issues
way.
for
Uh,
sure.
and I got to do a shout out to Jessica's and my boss, John Dixon, who's not only
That's
one of the
fine,
best
because I'm still
public
my bosses.
speakers. Yeah, your boss too. That's true. He's not only one of the best public speakers I have ever worked for, but he's just an all-around great boss to work for. So he's made this job, well, between him and Jessica, it makes this job a dream.
And
Easy,
hopefully the
great,
dream sales team that you work with every day too, right?
for sure. Well, they make it
Uh,
easy.
uh, uh.
Little plug there.
Uh, I make it easy. I make it easy for everybody. No.
Yeah,
No, it's just a great team all around,
it is.
Yeah,
really.
we
I
really
mean,
do.
it's
So,
it's just been kind of a roller coaster. It's so busy, that it just moves really, really fast, and it's hard to believe the time has flown like this. But we all try to look out for each other and help each other as much as we can, and obviously get as much work done as we possibly can. So,
Yeah.
um,
I think we all kind of felt like we were coasting a little bit last year because business was down a bit. But and now
I
our
can
busy
see
season
that,
is
but
here,
okay.
kind of hit us out of nowhere, right? And everybody's gonna
Yeah,
kind of get back into the groove of processing
mhm.
lots of business all the time, which
right.
is great. It's a good thing.
Yep, always.
So let's dive into the meat and potatoes. We get a lot of calls pretty much every day, and I would gather, I mean, Dan, you can probably confirm this. A lot of the phone calls you take daily have the same few questions on it. And so
Yeah,
we
pretty
thought
much.
we would put together this podcast. We're also going to probably post a blog about it as well, just to kind of answer some of the most popular questions that customer service team gets in. So we'll start out at the top. We have a little list here that we're going to go off of. And the first question we have is, can I get a deck page prior to processing the payment for a new business policy?
Nope.
Who wants to take it? Dan, go.
Well, you
Oh,
started, Dan.
the reason we get asked that question is because agents are, let's be honest here, an agent's meat and potatoes is not flood. It's typically homeowners and auto policies. And speaking as someone who's had both, um, you don't have to pay for that all up front right away. They can do what they call a binder, which binds you to the policy, and you can pay it off in installments. With flood, you can't do that. Um, Flood has to be paid up in front before you get an active policy. It's all got to be paid, which makes it a little more challenging, but it's not too bad. So
Yeah. So, unlike some homeowner carriers, some contracts you might have with a homeowner carrier as an agent, you'll get binding authority with those other companies. And we unfortunately can't offer binding authority to our agents, which is another reason that we can't issue the
yeah,
deck page right away and why you can't do a binder either.
way to give that
Um,
question to the one of us who's not an agent, guys.
that's all right. We were trying to test you.
Right.
I mean, on a side note though, I mean, although it says that we can't pay in installments, we do allow credit card payments,
right.
which even though there's interest involved with that, we will allow a credit card payment and then the insured could make payments on that along with Mortgagee Pay. So we provide that extra time frame for the mortgage payment. Yes, of course, we can't issue prior. However, if we do have it escrowed, then the mortgagee is actually only paying it in installments through their mortgage payment. So I know it's sort of it's not exactly the same thing, but it does allow that, ability to
It's a
pay
little
over
bit of
time
flexibility,
versus,
yeah.
right, versus
We are
paying upfront.
we are all about the
So,
flexibility.
right. And so that kind of I'm going to jump down a couple of notches here to the billing questions that we get most often, which I think you kind of just touched on a little bit, which is, can we do installment billing and can we bill the mortgage company? So, Jessica, you just said that we don't do any installment billing. All of our policies are paid in full, but we do give a credit card option. We do take Visa and MasterCard. So, if it is available to you, that's probably an easier way for you to pay down your flood insurance policy. But what about Mortgagee bill specifically on new business? What is the procedure there? Do
Do you
we
want me
have
to?
one?
We
Go ahead.
don't,
I took the last one.
see, essentially, we just we send an offer essentially to each one of the interested parties. So the agent, the insured, the mortgage company, we can provide that offer immediately upon them quoting, where they can turn around, take that quote to the mortgage company and get the payment. So that is the quickest route. We also we're looking at options for that, but we're not quite there yet. We've had a lot of interest in some sort of direct billing through the mortgage companies and so forth. So always trying to learn and take
Yeah.
feedback and ideas from agents. I mean, we get some fantastic feedback through our feedback line, and we're we're trying to implement a lot of those things that agents have asked for.
For sure.
Yeah, so if you ever have customers asking on a closing if we can just bill their mortgagee on a brand new policy, unfortunately, there the answer is going to be no. Typically, what I tell agents is have your customers pay it up front and then get reimbursed by their mortgage company at closing. And usually the mortgage company will be able to do that, just issue a check at the closing. Do you have anything else to add to that, Dan? I'm sure you get a lot
I
of billing questions.
Yeah, I do. So one of the things that we've found that works really well, especially with the major mortgage lenders like JP Morgan Chase, Wells Fargo, PennyMac, uh, just to name a few. If they want the mortgage company to pay the initial payment on, or the initial year on their flood policy, sending the insured into their closing with a copy of the signed and dated application that we have, as well as a copy of their original quote, tends to work wonders with these banks. They use the signed and dated application as, okay, this is signed legal intent to purchase flood policy. Oh, look, here's the original quote, which is a fine breakdown. They treat it just like a billing statement, and issue the check there. The nice thing about our company is we will actually give the mortgage company 30 days to get us payment,
Hmm.
and we'll hold the effective date. They won't have an active policy, but we'll retroactively kick it in. So yeah,
Yeah, one of the
that's
newest changes we had too is if you process an electronic payment and electronic signature, barring two states, which are Dan's favorites, you can actually get a deck page right away. So if the mortgage company is really requiring that deck page at closing, you can get it right away, even if it's the day before, even the morning of that closing, you'll be able to get the deck page if you process everything electronically. So. I mean, that for me was probably one of the most exciting changes we've had in a long time was that instant issue deck page, and our agents really do seem to love that new feature. So it's great.
even though it affects you least of all the other reps on your
I
level.
know. So New
But
York,
well,
unfortunately, is one of the states where we don't do instant issue, as well as Illinois.
Illinois, yep, the other
Yeah,
stamping state.
that's Dave's state now, so I don't have to worry about them. But New
Ooh,
York
aren't you
for
lucky?
sure, because of your wonderful Part C affidavits, we cannot instant issue. Sorry, New York. Um,
We
so
still
I'm
love
gonna
you.
ask you one.
Uh,
Yeah, kind of. No. Yeah. I'm going to ask one more processing or system question, then we're going to get down to some of the meat and potatoes of the policy. So I think one of the most popular questions too is how do I make changes? So when somebody issues a policy, they need to change a mortgage company, for example. How do they do that?
Well,
That's
I guess do you want me to jump in or you?
yeah. No, do it. I'm not gonna take the whole podcast, although I could. So,
Either. Well, okay. So essentially, when they have a change that they want to create, they actually go in to our portal and pull up the policy, and they can submit a change to be reviewed. At this point, they can't issue any changes that they want to make. It actually comes to us, and then we have to review them. We are looking at some additional agent capabilities that will allow them to do non-monetary changes, just because we still have to review anything that has to do with quoting or changing rates. So at this point, we're still working towards that, but that is one of our big goals, is to try to get as possible to them. So not quite there, but working on it.
Yeah, we do have another option too. If you don't have your login information for one reason or another, I know some of our agents don't access us directly through the Diamond portal. You could also email it, and the email address, I don't remember at the top of my head, which what is the email address, the
Oh,
email
Dan,
chain?
go.
EZ flood, letter E, letter Z flood at aon.com. Easy
All
peasy.
right. That was pretty easy.
Yep. Or
Uh,
DAN dot.
so well, it was worse when we were National Flood Services. We had to have to spell
That
out
was bad.
all of the words.
Yep.
So at least now it's just three letters and .com. All right.
Uh-huh.
So this, to me, this is a question that I get very frequently because a lot of agents are brand new to the the private flood world, and they cannot for the life of them figure out how private can be so much cheaper than the NFIP, and they always think that they've done something wrong.
Yep.
So, what is your answer to that, Dan? I feel like you're the specialist when it comes to this question.
So this is an easy one to break down for an agent for me. Okay, say I want to place $100 bet. I want to place $100 bet that this person is not going to have an accident in the next year. If I just put up all the money and that person, I mean by myself, and that person has an accident, that's a lot of money that I just put out. But
Mhm.
if I have 9 other friends and each of us puts in a portion of the money and place that same $100 bet, so there's 10 of us, and if an accident happens, the risk is only split 10 ways, which is what we do. So Lloyd's of London is an excellent, wonderful company. They've been in business for since the 1600s.
Mhm.
um, but that's what they do. Instead of just have one bank assume all the risk on insuring anything, they have many banks get together, and then they'll discuss it, and they'll go, okay, we'll take 30%, we'll take 10%, we'll take 5%,
Mhm.
and they spread the risk out. That's the biggest thing that allows us to beat a lot. I mean, it definitely lets us beat FEMA, but there's more. Our systems are almost fully automated. I mean, most of what we do on a daily basis is cross-checking the automation and the human factor with that automation. That cuts down on cost tremendously. There isn't a lot of paperwork to shuffle around. In addition to the calls to all of the other factors that go into calculating your final premium, like elevation of the house, floodplain that it's in, what's the base flood elevation of the place. All of that's automated for us, so we don't have to have an elevation certificate. We don't need photos of everything. All of that's done for us, for the agent before they even click anything. It's just, here's the address. Okay, we've got it. Let's go. 12 questions. We're done.
Right.
So
And
that
don't
allows
forget
us
the
to,
fees. I mean,
yeah,
there's
and the
fees
fees.
that
Mhm.
FEMA charges that we just don't.
Right.
For instance, the primary residence, secondary residence fees that FEMA charges on top of the policy
That's
premium. And that can be
$275 you don't have to
significant.
deal with,
Yeah.
for sure.
So, I mean, it may increase the premium, but it's not going to be a fee on top of the
It's not
premium.
going to increase it
And that increase, I have yet to
$250.
see it go
Right.
anywhere near that kind of increase.
Yeah.
So it's
Yeah.
usually pretty small. So
Yeah, and the good news is now, I mean, there's a lot of talk about risk rating 2.0 in the media these days, and I did sit in on a few webinars over the last couple weeks trying to get a handle on what exactly is going to be changing about them. And it looks like they're moving over to a rating platform that we're already using as far as
Mhm.
risk assessment goes. So it just
yeah,
goes to show that we were going in the right direction already way before
right.
the NFIP decided. So yeah, Dan's right. We do take a lot more into account rather than just your flood zone. In fact, the flood zone is probably one of the less factors that
Yeah,
we have on the list
yeah,
of things like distance to water elevation, all the things that Dan mentioned already. So because we can better assess the risk because of our risk modeling software that we have, that has a lot to do with why we're not
yeah,
just looking at one thing or two things. We have a million things that we're looking at that get loaded into a flood score and then ultimately decide what the premium is going to be. All
for
right.
sure. Way to sum up.
Yeah. Yeah. Uh,
It's like
so
you've done this before.
there's the elusive ICC premium.
Oh,
That is going to be our last and final question. I get this question a lot, mainly because we don't exactly spell out what that means on the deck page. Maybe we should just put increased cost and compliance. Not that anybody really knows what that means either.
no.
So, who would like to unpack the ICC premium?
Do you have a spiel, Dan?
For ICC, no.
He may have just written a blog about it.
Yeah, I just wrote a blog post about it, so that should be showing up shortly. See, check
Hmm.
out our blog.
Yeah, check out our blog.
W-
Shameless
Well,
plug.
I have the
aonedge.com. So,
definition if you guys would like that too. I mean, essentially the definition of it is coverage of one of several resources for flood insurance policyholders who need additional help rebuilding after flood. It provides, let's see here, up to a certain amount of money to help cover the cost of the mitigation measures that
it's
will
usually
reduce the
30,000.
flood risk. Yep, 30,000 is what they have under the FEMA website. So that's essentially what it is. It's just to
Maybe I ought to take
assist
this.
with, yeah.
Just- okay,
I
so
mean, I don't know a better way of really explaining it.
ICC is there. It's part of our packages. You can't get rid of it, nor would you want to get rid of it.
Hmm.
Um, if you have flooding and you do a claim and your house is really, really damaged, like to the point where, I have to destroy it and remove all the debris, ICC is a separate claim that you can file. So you can file this with, it actually goes through FEMA offices, but um, that just goes back to FEMA roots. I mean, and it allows for, um, hold on. There's four things that it allows for to
Yeah, so it
mitigate
allows
flood,
for
right?
relocation. It allows you
Right,
to
relocation.
raise the home.
Mm.
Uh,
And by raise the home, we mean raise it above the base flood elevation. And base flood elevation is the height that FEMA says that water should get during a flood. So,
mhm.
Right, and it's by state, so it takes into
by
account the
state,
state or community floodplain management laws or
right?
ordinances, and it helps helps provide funding towards getting your house compliant so that you meet those guidelines, which means it'll be less likely to flood.
Yeah.
And
So if you're familiar with a homeowner policy, you have law and ordinance coverage. Typically, I think most policies come with 10%, and you can raise that limit on a homeowner policy. It's basically the same, but as it pertains to flood. So after a flood, I think it's usually if you've lost more than 50% of your home in the flood or
right,
you have to rebuild more than 50%, and the town now has an ordinance in place that you have to raise it above a certain floodplain, then these $30,000 will go towards those expenses. We are by no means telling you that it's only going to cost you $30,000 to raise your
no,
home or relocate your home
but it will
because
help
it
tremendously.
will help. But we had to put, not that we had to, but we put that in there and we matched the FEMA limit. So right now, FEMA offers 30,000 as an easy flood. We're always looking to improve policies. So if there are any agents out there that feel like we need to raise that limit, I've only really been involved in a few claims. I live in New Jersey, so we dealt with Superstorm Sandy, and right after that storm, a lot of homes did have to be raised. And I was involved with a few claims here and there that actually had the coverage. But believe it or not, I know it's shocking that not a lot of those people had flood insurance because their homes were paid off
Right.
and their mortgage companies weren't requiring it. So just think about the $30,000 or a couple hundreds of thousands of dollars you could have had in that scenario if you had just kept that
Right.
flood policy even after
Would have
you paid
helped
the
you.
mortgage off.
The other thing too, if you have to remove your house completely off the
Hmm.
property and move it elsewhere, you can file an ICC claim that will help offset that cost
Right.
too. I think the other thing we didn't talk about was actually something you talked about on the last podcast, is
Pulling out the
house
archives here.
mitigation, right? Adding flood vents to your lowest
Yes.
floor, right?
Hmm.
Adding I don't know. There's tons of stuff you can do. I think that as far as the NFIP is concerned, though, I think that only applies to commercial properties for
I
ICC.
know
If
that they
I'm
give you
mistaken.
$1,000 to help with some expenses like moving things out of your basement or to a higher floor and sandbags and that type of thing. Though I'm
Mhm.
not sure if we will extend to venting, but we can certainly do some
Yeah,
research on that.
I don't think that we do. Well, I know we might be a little bit different there. I have to talk to Craw. Can I mention
Sure. He
Crawford?
actually just recorded a podcast with this morning, so
Yeah.
unfortunately, we
So
will have the answer right away.
yeah. um,
So that concluded my list of questions. Do you guys have any other questions that any of these brought up, maybe that you just want to bring to light before we close out? I
think so.
know.
Jessica, you got all quiet.
I know
I'm
Dan is
sorry.
probably thinking that he has to instruct New York agents multiple times a day on how to fill out the ICC premium, but unfortunately, we can't really explain that, not the ICC, the Part C affidavit. We can't really
Oh,
explain that via
Part C.
podcast.
No.
So,
There are a bunch of questions that I get because I'm an early morning agent. I primarily serve the West Coast, and a lot of our business is from New York State.
mhm.
There's a lot of questions I get that just aren't going to make the podcast because they're specific to New York State, and
Maybe we just need to do a New York one.
yeah, maybe we just do a New York podcast. So yeah, for sure.
Well, and the most common question that we get, which is awesome, is I've never quoted with you guys before. How do I do this?
Yep.
Mhm.
So, I mean, just knowing that the majority of our volume is that, I
Hmm.
mean,
Yeah,
another reason why we're so busy all the time. But we love walking the agents through that. And it is a very easy process. Once they get through it the first time, usually they're rocking and rolling. And having these podcasts help them along the way as well, just so that they can, get the answers that they need. The sales team, you have all those trainings, those learn in tens where you just have a quick
Hmm.
session and go over something real quick. So yeah, I don't really have anything else specific to answer other than,
uh,
Yeah. I think
it's a
part of the
go
reason
ahead.
that we are so easy to quote is because we don't require elevation certificates. I think that's what a lot of agents get hung up on when they're quoting the NFIP. So that really is what enables us to get down to those 12 questions because we don't have the additional whatever it is, 15 questions from the elevation certificates that you have to deal with. So we're a better option when you're dealing with a property without a positive elevation certificate.
Plus the trigonometry that goes involved in it.
Yes, exactly.
Um,
Exactly.
so
Depending on the system you use, they don't always necessarily go in the order of the elevation certificate, so it can be very confusing.
yeah, one drastic, almost shocking change moving from the NFIP to private flood, specifically easy flood, was I mean, the biggest question any customer service agent is always going to get on the phone is usually, why is my premium so expensive? Moving to private flood, you usually get the opposite. Wait a minute, why is my premium not expensive?
Yep. It's so
Which is
true.
awesome.
A lot of agents call in with that same question is, why did your
Yeah,
renewal go down? And
yeah, yeah,
and that really just comes from a learning process. We are a fairly new company. We are only 6 years old, so as we kind of navigate this new world of private flood, we figure out better ways of doing things, and that
right,
results usually in cost savings to our customers. So always a great thing.
for sure.
All right. Everybody, thank you for joining today. I'm sure there's going to be more to come. These guys are going to be writing down questions for our next iteration of frequently asked questions of the customer service team. Thank you for listening to What the Flood podcast, brought to you by Aon Edge. For more information about our programs, please visit aonedge.com. For questions, please email us at edgefeedback@aon.com. Until next time, thanks for listening.